Hello, amazing traders, and welcome back. In this lecture, we're going to be learning about ascending and descending triangles. Ascending and descending triangular patterns. Now, these are similar to your right angle triangle, left angle triangle, or whatever you call them from your mathematical class. Okay, and these are similar to your right angle and left angle triangles. Unlike your symmetrical triangle, which we learned in the last video, these ones tend to have a flat angle here. So this is more of a continuation pattern, because when the market hits here, come here, hits here, come here, hits here, there is a lot of pressure, there's a lot of buy pressure created here, and the buyers tend to gain strength more and more as the angle here keeps reducing. Okay, so we then come to a point where the buyers defeat the sellers, and then the market just keeps going up. That's in this example. While in the descending triangle, the opposite happens. The market comes down, hits here, comes down, hits here, comes down, hits here. Little by little, the sellers tend to gain more and more strength, and then finally it breaks down to the downside, and the sellers continue rallying to the downside. So this is how the ascending and descending triangles tend to play out in the market. Now, this is an example of ascending and descending triangles, or this is an example of ascending triangles. The next slide we'll look at descending triangles, right? Yeah. So this is an example of how it will play out. So you can see, came up, hit here, came up, hit here, came up, hit here, and finally it broke out. Now the target for our position here will be the same as this. Okay, the target will be the same as this. Okay, as you can see, it came here and then made this candlestick pattern and started coming down and started to come down. Now, we also have this example where hit here, came down, hit here, came down, hit here, came down, hit here, then broke and continued rallying up and made us this much profit. Now, we have to observe that when you're on higher time frames, it might be a little bit harder to observe some of these patterns, because they won't play out with a lot of candles like how it's doing here. As you can see, this is a daily time frame, so it just plays out more of less precisely. Okay, but if you look very well, you still observe that the pattern actually played out. Okay, so as far as the pattern played out, it played out and continue. And for your information, signals on higher time frames tend to carry more weight, because like I told you before, higher time frames are the leading time frames. Big banks and hedge funds do not trade on lower time frames like the normal retail traders. Most traders use very lower time frames, 5 minutes, 1 minute, 15 minutes, and so on and so forth, 1 hour. But retail traders use big time frames to analyze and to trade. So you tend to see that signals that happen on higher time frames are less likely to be wrong. Okay, so that's one advantage of doing higher time frame analysis also. I think we're going to have a module that teaches you how to do multi-time frame analysis, where you analyze from higher time frames and then go down to lower time frames to execute your trades. So that should be part of this course. Okay. So, but for the ascending triangle, this is a simple example of how it's going to play out. So we have this for the descending triangle. Now this is a Bitcoin chart, BTC USD, and the descending triangle played out like this. The market was coming down, hit this resistance level, came here, and then made this level. Came here, hit the level again, came here and played around, then broke out to this level. Now, this distance is approximately the same distance the market made to the downside. Okay, you have to understand that price patterns are valid along different financial markets, not just the Forex market, but also the stock market, the cryptocurrency market, and so on and so forth. These are activities of buyers and sellers in the market. As far as there are buyers and sellers in the market will display itself in chart patterns, in candlestick patterns, and so on and so forth, in technical analysis. And then that's why technical analysis remains valid across all of these markets. So if you learn technical analysis properly, you won't need to go and start learning how to treat cryptocurrency. When you see a crypto chart, you'll be able to analyze it properly and know what will happen. Okay, So that's the importance of learning technical analysis properly, especially price action analysis. So this is another example of the descending triangle. We can see that the market came here, came up, came here, hit here, came here, and then broke down to the downside. This is always a continuation pattern. This is always a continuation pattern, not a reversal. We're always looking for a continuation. That's it for this market. Let's see if we can see some examples here. Let's check if we can see some examples. Do we have any examples of ascending and descending triangles here? Do we? I'm not sure we have here. Okay, I can't see much examples here. Can't see much examples here. Are there any examples? Really, I can't find much examples here, but when we look into many other charts and different time frames, I'm very sure we're going to see a lot of examples. Okay, so this is what you do on your own. Just try to go over the charts and observe for yourself. Observe for yourself and see what the market is doing. So whenever you see an example of ascending or descending triangle, you just take note and see how the market plays out after the pattern. So that will be it for this video. That will be it for this lecture. The next lecture, we're going to look at more patterns. Hope to see you there. Bye.